Atha Energy CEO. We are a large-scale exploration company in the uranium space, focused in Canada across Canada's best uranium jurisdictions, led by our Angilak project, which is our flagship project.
Troy, good to see you. Here we are in Quebec. Quite nice, isn't it?
It's great.
Yeah.
Great city.
Good conference?
Yeah. It's been very good.
And loaded with meetings.
Loaded, back to back.
Fantastic. Right, okay. We are going to have a little catch up with you here. There may be some noises, folks, so bear with. Uranium seems to be making us a quiet comeback off the back of Mr. Trump's executive orders. It's indicative of an intent from the US. What's that doing for you?
It's amazing, quite frankly. Yeah. You look at the magnitude of those executive orders, you're talking about quadrupling of nuclear power in the US within an accelerated timeline, putting some dates to it, and that's really interesting. Talking about going from 50 million pounds per annum, which is the largest market in the nuclear energy space, in the uranium space, up to, say, 200 million pounds per annum within those executive orders, keeping in mind that the entire size of the market right now is about 195 million pounds. So it cannot overstate the materiality of those executive orders.
Right, and obviously that's great for the US. What's that do for Canada?
Yeah, well, you look at current U.S. production, even kind of peak production in the last cycle, being somewhere around 6 million pounds per annum. We're talking about going to 200 potentially within that market in the U.S. You've got a massive uranium producing jurisdiction just to the north. You talk about uranium supply chains, etc. I think it's very, very positive for Canada, for Canadian uranium resources. I think that's a big part of the nuclear build-out in the U.S. is securing that supply chain, call it within the North American sphere. That comes on the heels, and really at a time when we're seeing a bifurcated uranium market. You look at Kazakh production, large percentage of Kazakh production already earmarked for China, Russia, etc. That pulls this market, kind of splits it in two. And then you look at overall supply deficits that are projected in the near term and in the long term. We need more uranium. We need more uranium in North America.
Yeah, we do. And we've sort of talked to a few American producers, and I think it's kind of clear that the numbers aren't there. They are going to need to look towards Canada. How are relations at the moment, and have we moved on?
Yeah. Hey, Canada, U.S., large trading partners have been forever. Our expectation is that will continue to be Canada's key relationship on a go-forward basis. It's clear. It has been historically, it is right now, and we believe it will remain that way moving forward. It's a large market right now, continues to be a large market, and that market's growing. And, the exciting part is, the emphasis on new nuclear, call it new nuclear, small modular reactors tied to data center build-outs, looking at, with the Department of Defense, Department of Energy, fast tracking, finding sites, implementing it. And the big thing is that now we've got the tech sector that is building large-scale data centers that are fully behind nuclear power. We saw that yesterday with Constellation, with Meta and Constellation, right? It's completely different driver that is driving the space right now, as opposed to looking at large-scale baseload utilities that are the drivers in the space that have timelines that are decades. Thinking on terms of decades. You have a tech sector now that is driving this build out, and they're thinking in terms of months and years.
Yeah. I think the fortunes of many uranium juniors seem to be predicated on what spot prices do, right? Yeah. The eternal debate. I've been talking about this for 5 years, and I think CEOs are very keen to dislocate that relationship and say, well, look, it's about term contracts. That's the important factor here. But people look to spot price. That seems to be driven by not a lot of buying at the moment. There's not a lot of mobile inventory. There's not a lot of trading on a weekly basis. I think someone told me last year, 2024, there were 7 trades per week on average. It's not a lot, right? So something's got to give. So utilities don't seem to be getting a message, or they know something that we don't. So how do you read that landscape?
I just look at the fundamentals. Okay, and to me, it's a tricky business picking timing of when things are going to move. I look at the directionality of this market. I look at the directionality of the term market and the spot market, and the asymmetry to me is very, very high to the upside, right? For a couple of reasons. You look at fully acknowledge that junior equities are very highly correlated to spot price. It's self-evident, right? You look at what puts upward pressure on the spot price in the uranium market, and it is a term contracting market. You look at the amount of pounds that are uncovered under contract right now. You look at that curve. You compare that curve to, say, a 2006 timeframe, and it's very, very comparable. Okay, so we're coming into a period where there's a large amount of demand that is uncovered under contract, very similar to that 2006, 2007 timeframe. You think back to the spot market spot price response to that term contracting cycle during that period, which that's what it was largely driven by, was that contracting cycle. And the spot price went from the mid 30s up to $135, $138 US over the course of about 18 months. And so that upward pressure, we believe, is there. We believe a big catalyst for that in the near term is the contracting cycle. You look at inventories, they've been drawn down. People in the industry, producers, talk about this often, where utilities still haven't returned back to replacement rate contracting. So all of these factors, when you pile them on top of each other, what we see is a spring that's being coiled very, very tight. And we like the position we're in from a macro perspective.
Right. Okay. We better move on from the macro. So here's talk about you guys, Atha Energy, and actually remind people about the project Angilak and what are you doing there?
Yeah, Angilak is has emerged as our flagship project. We acquired Latitude Uranium for Angilak. The project itself, 43 million pound historic resource at 0.69% U3O8. We really like the foundation. Right. We got in there last year, got our hands on it for the first time, started to work. We did a 10,000 meter drill program, just over 10,000 meters, 25 drill holes, stepped out from the deposit materially in all directions, and we went 25 for 25. We hit mineralization in 100% of the holes,
right?
Which, from my experience, is uncommon. And we know each other. I've got a background in the uranium experience that goes back quite a ways. Had the opportunity to do a lot of work on a lot of tier 1 deposits over the years. It is uncommon to be able to step out and intersect mineralization 100% in drill holes. And what that speaks to us about is the scale of the system. The metal endowment that we see there is high. And so as a function of that, we also set to work doing a bunch of foundational exploration work, understanding the broader system, because the deposit itself, Matt, sits right at the edge of the Angilak Basin, which is a basin that is similar to the Athabasca.
Right.
And that basin is completely unexplored. Had been until now.
Is anyone else operating up there?
No, we're pretty much exclusively there. We have control of the entire Angilak Basin.
Okay, interesting. Okay, well, look, you just kicking off a drill program at the moment.
Yes, that's right.
Why don't you tell us a bit about that?
Yeah, drill program, two-pronged approach here.
Yeah.
Okay, so last year, building on the work that we did, within the deposit area, we intersected mineralization, expanded mineralization with 100% success rate on drilling. Expect more of the same. Okay, so we expect to continue to grow that envelope, that mineralized envelope around the deposit. In addition to that, we've also spent a year doing some foundational exploration work, building up a model. What that model recognized is a very large mineralized trend coming across the Angilak Basin, about 31 kilometers from edge to edge.
Yeah.
Okay. This is a structural setting and a geologic setting similar to what you would see in the Athabasca Basin, and in our technical team's view, very highly prospective for Athabasca style. And what I mean by Athabasca style is unconformity and/or basement associated uranium mineralization in proximity to that basin. And so what we've done is built up these targets that are highly compelling. Right. Rib area and the KU area. Okay. Off the rib area, historic drilling mineralization up to 5.6% in core, completely untested going into this basin. The KU area, right along a dilational structure. When I say dilational structure, think Athabasca, where you have, MacArthur River is oriented along a certain portion of a conductive structure. Come along, you've got Cigar Lake along another part of that. Eagle Point. These things are all connected structurally, and so what we're seeing is this long trend in this KU area. We have an excellent geophysics response. In addition to that, we have uranium mineralization from trench samples in sandstone up to 30% above these target areas. So you layer on evidence, you layer on data layers. We really like those targets. We think they are highly prospective for unconformity associated mineralization.
Right. Last time we had a kind of reasonably technical conversation, and I think some of the feedback was, "That's great. Didn't understand it. Wasn't me." So I'm trying to answer that question in this session, which is like, you've got this historic resource.
Yep.
It's of a size that's meaningful, I think, in the context of what we're seeing in North America.
Absolutely.
And even, quite frankly, in Canada. So how do you move? What have you got to do with that historic resource now?
Hey, starting off in that's Lac 50, the area of Lac 50. We haven't found the edges of the system yet.
Right.
So this program right now is about continuing to expand that footprint of mineralization till we get to the edge. And that's a good problem to have. Okay, we're already talking about a historic resource that has 43 million pounds. Last year, we had very high success.
Let's be clear, this is historic. When are we talking about? When was it?
Yeah, the resource history there is, this is one of the reasons that we bought the company for the project. In 2011, the project was the maiden resource is 14 million pounds.
Got it.
Okay, they updated that in 2012 to 27 million pounds.
Right.
They updated that yet again to 43 million pounds the subsequent year. So 2011, 12,
so it's that sort of time. We're not talking decades and decades ago.
It's not 1956 to
So just trying to understand in terms of the quality of the potential quality of that you're working with. Okay, what do we do now?
Now it's continuing to expand significantly because we really like the foundation of that resource, of that historic resource. Okay, it's 0.69%. That's you put that in a global context. It's really compelling. I had the opportunity to be the chief geologist at one of Cameco's mines at Eagle Point. Eagle Point has a current resource grade of about 0.7. Okay, to contextualize that. And now what we're seeing is we're recognizing the scale of the system now is very large. We've stepped out significantly from the deposit, had success. We're going to continue to step out within the area of Lac 50 to ultimately our objective is to step out sufficiently so that we can identify the scale of a system, to then move forward into subsequent phases. So this year is about expansion, continued expansion of the deposit, of the mineralized system.
Right.
Well, think about that as high probability work, right? Like we're working within an area that has had significant investment, significant drilling. It's right at the edge of an area that we've mapped called the Mushroom Lake Outcrop. That Mushroom Lake Outcrop has mineralization across the surface of it. It's over about 3 kilometers with surface grab samples. Some grades up to 47.8% on surface that haven't been tested, haven't been drilled. That's tied right into the Lac 50 deposit area.
Right.
Okay. And then so higher probability work there, expansion of the footprint. In addition, think about the exploration potential in a basin that is analogous to the Athabasca, where we've layered on built up targets for the first time that has not been drilled.
Right.
Our team internally, we think about the exploration opportunity here as being analogous to the Northeast Athabasca Basin circa 1965.
Okay.
So we like it.
We like it. Okay. And I want to kind of suck in a few people from mining investors from outside. 50% of the investment horizon is gold. Okay. So in a gold context, what we're seeing is lots of gold companies moving through to advanced development. They want to be able to tell a near-term revenue story, and a near-term production story, because the market likes it. That's what they want to hear. Show me the money time, right? For uranium, how does it work? Because you've worked on enough big projects to go, look, we need to get a certain scale. We need to kind of show certain economics around this thing for us to even have a kind of starter pit or starter operation. So it may be very, very different from gold, or there may be some parallels. How should gold investors looking at this view this? Because it's high grade. And gold investors love high grade.
Yeah, naturally. Yeah, how we should think about this is, we're maybe contextualizing it versus a Lassonde curve, for instance. Okay. We are in the we're at the base of the curve. So you think about investing on the left side on the base of the curve in a situation where we've got enough. There's been enough investment. There's been enough work done to have a line of sight to where things are going. Okay. Right. And yet not being at the the first kind of lift up, the peak pinnacle of that first part of the Lassonde curve is when you fully define your first resource, or your ultimate size and scale of your resource. And so we see a lot of growth potential for Atha within the next 12 to 24 months that comes through exploration results, favorable, leveraging the information that we have right now, building out the size and scale of the system, and then ultimately moving into a delineation phase. And obviously the delineation phase would kick off the start of that project development discussion as well.
Okay. Yeah. So let's kind of get that in context with the 10,000 meter you said program. Can you tell me how you're portioning that to be able to kind of deliver what you're talking about? Yeah,
and what we're doing again is between those two areas. Right. Think about the higher probability work around Lac 50. Right. And then the exploration work within the Angilak Basin.
So percentage terms, what does that mean?
I'm not getting pinned down on that.
Not sure yet.
No, and the reason for that is we have a very dynamic modeling process and exploration process built up, and we're very results driven. So we've got a process built up where we drill a hole. Right. Natural feedback right into a 3D model.
How quickly does that turn around, that data?
As soon as it's logged.
Because you've got the scintillometer.
Scint, probe, back into a 3D model, update the model, and then be able to... I've implemented this process across a few different projects, and what it allows you to do is make very good decisions in the field on how you're allocating capital into the ground. Okay. And so we are going to execute those meters split between those target areas in a way that has a maximum benefit.
Does that mean two drills going?
Two drills going.
Right. Okay. So it's concurrent activity.
Starting off drill at Lac 50 in that area called the Lac 50 area, deposit area. Second drill will be targeting the KU.
How far away are they? Sorry.
Yeah, they're a few kilometers. This is a large scale system. Yeah. Okay. Matt, when you look at this basin, when you look at the Angilak Basin, and just for reference, for scale reference, if you were to overlay it at the northeast Athabasca, it would stretch from Rabbit Lake to Cigar Lake.
Right. Okay. Most of it. Yeah. Okay.
It's a very big system. We're seeing mineralization on surface in tens of locations across, with surface samples, with grab samples, etc. The mineralization that we see across hundreds of drill holes speaks to a very large vernal endowment here. Right. And we're at the exciting phase of being able to now explore under an unexplored basin that is fertile, that there's a lot of uranium in for the first time.
Is that 10,000 meters? Is that like this season? Is that what you're talking about?
Yeah.
So it's pretty quick turnaround.
Yeah. Expect we have drills turning as we speak. Right. Hit the ground running. Yeah. We announced this morning. Drills turning as we speak. Second drill will be turning by this weekend, and then from there, just the guys will do their thing. We expect about 80 meters a day.
80 meters. Okay.
Per drill.
Okay, and just again to contextualize, like I'm trying to simplify this because that's what was asked of us after our last session. Was that in terms of there's a lot of operators, there's a lot of companies in the Athabasca Basin. There's a lot of Canadian companies. I think there's a lot of new entrants coming in, picking up, let's say, tired projects. Is that a polite way of saying it? I think that's the way to say it. Industry people go, that's useless, and they know what's what. But I think there's some companies coming in just trying to play the market. In the context of what you're seeing down in the Athabasca, how do you think you stack up? Can you compete?
Oh, that's why we bought the company and the project. We really like the scale potential that we're seeing in this exploration system.
Right.
In the context of any project globally.
Oh, globally. You feel that this is tier one potential.
The potential that we see there at this stage, with the targets that we have, we're talking about a year's worth of work to define targets that have multiple discovery potential. Okay, but we're not talking about one discrete 3-kilometer grid. We're talking about a 31-kilometer structural trend that's mineralized on one side with historic drilling that has mineralized on the other side in the 9 Iron area with outcrop samples up to 30% mineralization in the sandstone above these targets. We're seeing a lot of uranium mineralization, and now we're at the stage where we get to drill it.
And what have you done in between? What do you know about what's in between?
Geophysics.
Okay, so you've got some work.
No, absolutely. Over the course of last year, and this is a key to it, is that previously there hadn't been the work done to image underneath. The geophysics had not been done to understand what was going on underneath the cover of the sandstone basin. We have a very talented exploration team. Our exploration efforts are led by Cliff Rebring. Cliff was the chief geologist that brought Cigar Lake into production. He's worked on uranium projects globally. Very, very strong technical team and a uranium focused team, had been forever. And so naturally, when we looked at the project and acquired it and then got our hands on it, we're looking at this system that has 43 million pound historic resource at 0.69%, sitting right at the edge of a sandstone basin, and all of our Athabasca experience kicks in, and we're looking at this system saying, well, where can we conceive that you can localize high grade mineralization within this very large system that we're seeing, and that's the stage that we're at. So we put a year's worth of work into de-risking these targets.
It's an interesting challenge. We see this a lot where a company has got control of a district, which sounds great because there's a lot of potential there, but it's the how you kind of fund and model the expansion work, and you need the market to react, you need the uranium price to react, and all of these wonderful things. But it's all daunted by the opportunity, or are you more excited?
Very excited. Yeah, very excited, because for us, we have a foundation now. The foundation in the project comes around the Lac 50 area, continuing to expand the Lac 50 area. We believe that you put a box around that area. We like that as a standalone. Right? Standalone opportunity within the Lac 50 area. If that was it, we'd be perfectly happy. The opportunity that we see within the basin, that is opportunity for discovery in a system that is completely untested, that has all of the features associated with Athabasca style unconformity associated mineralization. So that's a tremendous opportunity. You think about the eastern edge of the basin, the Athabasca. Rabbit Lake was discovered in 1968.
Wow.
Okay. Key Lake, I think 71. There's been continuous and ongoing exploration across the eastern Athabasca since the mid-60s. Okay? We look at the maturity of that district relative to the underexplored and unexplored nature of the district that we're working in, and we get the opportunity to be the first pass explorers. I mentioned earlier that our technical team looks at this opportunity like being in the eastern Athabasca circa 1965, and that's what I mean. First pass opportunity in a fertile uranium district that is highly underexplored. So we like it a lot. We're not daunted by it. We're excited about it.
Potential sleeping giant. Good to see you, Troy. But we're going to talk to you later on stage.
Excellent.
Tell people the same thing.
Yeah, here we go.
Okay.